Gains in the technology sector, gains in the consumer discretionary sector, both pulled the Nasdaq higher for the 7th straight session. Temporary bailout of Greece announced on Friday triggered a late rally that sent the Dow Jones, the S&P 500, and the Russell to new all-time highs, and the Nasdaq to a new 15-year high. Are you climbing the wall of worry as this market continues to make new highs? Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for key U.S. financial markets. It is 7:24 a.m. Central Time, and I am recording this in preparation for market day, February the 23rd, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in, see where we are coming into Monday morning. First of all, our broad market indices just slightly down, nothing really of significance, especially after the run up at the end of the day on Friday. Not terribly surprising. Crude oil, though, down significantly, down 1.40, about 2.76%. Also down significantly would be the euro, about 0.74%, and gold down over 1%. So pretty significant movement going on that side of the ledger. And our overseas markets, China up 0.76%, Hong Kong scratched, Japan, like China, up about 0.73%. Europe is mixed, with Germany up 0.32 and the United Kingdom down about 0.40. In terms of macroeconomic reports for today that could move the markets, and especially ones that move the market during the trading day, we have an orange flag report. The existing home sales come out this morning, so be aware of that. In terms of what's coming for tomorrow on the U.S., you have consumer confidence, you have Yellen, Chairman Yellen speaking, and that can always roil things, especially as sensitive as we are to the first interest rate change. You have orange flag report, mortgage delinquencies, and that's probably it in terms of really important stuff. And looking out towards Wednesday, looks like just kind of normal activity there. So relatively quiet on the macroeconomic report for the start of the week. Let's take a look at volatility metrics, see where we're going. We continue to get very low. The short-term VIX down to 11.74, and you see the implied IV percentiles also all relatively low, with 3 of the 4 indices in the bottom third. In terms of standard deviation moves, we're perhaps a little bit below the norm. You did have big moves in NASDAQ and Dow on Friday afternoon that took it up over 1 standard deviation moves. You have been an entire trading week on the S&P 500 without a standard deviation move. So norm would be that we should see a little bit more volatility come back into those markets. And let's take a look at our daily report. I say no rollovers. Actually, if you're a bond trader, ZB does roll over about Thursday, I believe it is. So you need to double check that if you're a bond trader and be on top of that. Current opinions, market trend and intermediate term phase opinion. We're phase 3, higher highs and higher lows. So very typical normal bull market kind of posture at this point, now that we've finally broken out of that 3-month trading range that we seem to be stuck in for so long. Portfolio investor posture from IBD, confirmed uptrend. The GMI index, solid 6 out of 6, so the buy signal that has been in place since January 23rd. For the active traders, that market posture is very bullish. Position sizing opinions on both investor up to 100% and volatility active trader up to 100%. So pretty much all normal settings. Market timing opinion, 1 day neutral, 3-day neutral, and slightly bullish on the 2-week. Market posture across all 4 indices is banging its head right at the very top. You look at this: 98.7, 97.6, 99.5, 98.6, all very, very high. Obviously, these will still stay very bullish as long as these readings stay above an 80. So even if they start to drift down somewhat, that would still be a very bullish market posture. Our current threshold level is 0 for our hedge warning status, so perfectly normal risk levels, nothing really to get excited about. From a volatility base, there is nothing. In fact, you'll notice that distribution days have really tamed down. Our current count for S&P is 3, NASDAQ 2, so nothing really to point to from a volatility standpoint. We are not extremely low on volatility, nor are we by any means hitting any high volatility warnings. Trends, obviously, we're still very bullish. Intermarket risk aversion indicators 5 and 0, all on risk on. E-mini chart indicators, we were concerned about the number of amateur paint bars that we were seeing across our charts. Very low volume while making new highs, but then with Friday, you had a normal candle, normal volume with those new highs, so nothing really in particular to look at from there. Other opinions: option income strategies, VIX is back inside the acceptable window, giving us a go-ahead for putting on new option income strategies. Covered calls, slightly bullish, looking for an equal distribution between in the money and out of the money strikes. And then on put selling, slightly bullish, so acceptable for selling puts against a core basket of stocks that you're willing to own. So very good conditions are in place across the board. Never is a guarantee, but it is this kind of market condition that you should be looking for as you routinely applying your strategies. In terms of our point and figure, we did have a number of new changes to our key markets that we watch, so take a look at those and go and spend a little bit more time looking at what you're expecting as turning points in your key markets. From a relative rotation graph, well, we continue to see biotech, semiconductors, and real estate, followed by utilities as our top 4. Now note that the utilities has had this big U swing, so the question will be, are you going to find a bottom and then continue the longer term strength, or is this a sector that's in deep rotation and is heading down and you would not want to try to pick a bottom? You see also semiconductors, big U swing as well. So both of these sectors are relatively strong, and certainly in the longer term time frames, and you notice here this is 10 weeks ending February 20th. In the longer term time frames, those are very powerful sectors, and yet at the same time in recent they have been pulling back quite a bit, so you got to be aware of that. From our sector market posture, much stronger with utilities and energy being the exception. Other than that, really in all 3 time frames we're starting to see good angle and separation, and our market postures are really quite strong. From our percent change, you see on Friday the heroes were information technology, consumer discretionary, materials, and then healthcare was basically scratch. So I'm not going to say that any of these sectors were particularly powerful on what was a good up day. So that might be something of a note as well. Note who's down here at the bottom though. Energy and utilities continue to struggle, and picking a bottom on those sectors may be problematic. Top industry groups: retail, railroads, internet, transportation, and healthcare. Our same 5 we've been seeing in recent days are still in the top 5. So those certainly are the primary locations in which you want to focus your time and attention and your watch list and your development of your strategies. So as always, we greatly appreciate your liking us on YouTube and also any other social media platform that you're following us on. And then at the same time, you may send in comments or questions to support@falconglobaltraders.com. More information, of course, is always available at the website, including information about each of our 3 live trading rooms: equities, which we do core portfolio and swing trading, as well as our option room, and then, of course, our futures day trading room. Disclaimers as always: hit the pause button if you need more time. And, of course, we greatly appreciate you each and every day in our Falcon Global trading community. Good trading and goodbye.